Just a second while I get a drink. All right, the big stories in the market, guys. US dollar, the risk-off sentiment returns. Big scandal surrounding Donald Trump in the news. Trump reportedly asked the former FBI Director James Comey to end an investigation into the former National Security Advisor Michael Flynn. This means that Trump may have committed an obstruction of justice, an impeachable offense. We saw the stock market sharply lower on the news, and the dollar also sharply lower, falling for the 5th day in a row. We saw a flight to safety, a move to safe haven assets like gold and the Japanese yen. As we'll be seeing in just a sec, those charts, it's pretty clear that gold shot up as well as the Japanese yen. And in terms of the US dollar, today we got the weekly jobless claims figure at 12:30 p.m. GMT. Let's take a quick look at these charts and the impact of this political scandal and upheaval in the United States. Here we got a chart of the dollar index. We can see that the dollar index has been hit 1, 2, 3, 4, 5 days in a row. This is yesterday's candle. Just briefly on what the dollar index is. The dollar index is a broad measure of the US dollar. It's the US dollar measured against a basket of 6 of its major trading partners. So if you're looking to get a feel of how the US dollar is doing, this is the best measure of doing that, as opposed to looking at the euro against the dollar or dollar yen. Let's look at gold next. We can see a sharp up move in gold after this flight to safety surrounding the scandal in the United States. Big green candle higher in gold. We're looking at the daily chart. Next, the Japanese yen. We can see a sharp move down in dollar yen, which means people were selling dollars and buying yen. When you see a down move in dollar yen, it means people are selling dollars, buying yen, because that's the way forex pairs work. The base currency is the US dollar in this case, and the counter currency is the Japanese yen. Top stories. The euro rallied for the 4th consecutive day, reaching the highest level since October of 2016. Wednesday, we had Eurozone CPI coming out in line with expectations, with a strong gain of 1.9% in April. Eurozone inflation is closing in on the ECB's target of 2%. Keep in mind that the central banks have a dual mandate of stable prices and maximum employment, so they're watching that CPI figure very closely. Inflation has been putting pressure on the ECB to tighten fiscal policy. Central banks actually fear deflation more than they fear inflation, because falling prices, in the context of falling prices, consumers may defer spending, and this is what we saw in the Great Depression of the 1930s, and that can have a terrible impact on the market and take decades to get out of. Another point to mention, the reduction in political uncertainty after the French election is underpinning the euro. It's boosted the euro. Some quick notes on the British pound. UK economic figures were mixed on Wednesday. UK wage growth climbed 2.4% in line with expectation, and the unemployment rate fell to 4.6%, below the estimate of 4.7%. We got a cable, otherwise known as the British pound against the dollar, still hovering below the key 130 level. We got a major release later on today, the UK retail sales, which is expected to rebound with a gain of 1.2%. All right, enough about the fundamentals. Let's jump right into the charts, because I know a lot of you out there are into chart patterns and getting in ideas for your trading and kind of orienting yourself in terms of what's going on in the chart. So let's take a look at that. Okay, so starting out, we're going to look at the euro. In the case of the euro, we got a major downtrend line here. We can see 1 point here, 1 point here. We can see that it's broken through this major trend line resistance. Keep in mind that once a trend line's been broken through, this line can provide support if price comes back down here. Support meaning an area where you might see the sellers meet too many buyers and price bounces there. Here we got the 200 period SMA, a very important moving average to watch on the daily time frame. We can see that price found support around the 200 period SMA here, and to the downside here we've got trendline support coming upwards. So if price falls all the way down here, we might expect to see a bounce here. Looking at the RSI, we can see that it's just starting to poke its head into the 70 area. If it crosses above there, it's an indicator that prices are overbought. Keep in mind with the RSI, if you see it come up here and curve downwards and cross below the 70 line again, analysts typically view that as a strong selling signal. So guys, we're going to go through the majors right now quickly, and then we're going to look at some short-term charts also, which are going to be able to help you generate some ideas in your trading. And then towards the end of the presentation, we're going to look at a simple trading strategy, or you might describe it as a simple trading system, using the 4-hour, the 1-hour, and the 15-minute chart. So this is the type of strategy where you'll be able to get a few different signals within one day, intraday signals. When you're looking at a chart like this, it may be days before price retraces down here where we might see a bounce. So looking at the daily chart is good for day traders, but it's also important for swing traders or traders who hold on to positions for a number of days, because sometimes it can take days to reach these levels. Whereas on the 15-minute chart, you're going to see these levels get touched intraday. So moving on, we're going to look at cable, British pound against the US dollar. This is a really interesting chart for a couple of reasons. We got really good horizontal resistance up here. So analysts are going to be expecting a nice follow-through if price is able to break out through this level here. Remember, it's right at the key psych level of 130 here, and that makes it an even bigger level. Down here we've got a moving average crossover. We've got the 50-period moving average crossing above the 200-period moving average, which is a very bullish indicator on the daily chart, which is the time frame that we're looking at here. So we're looking for a potential bullish move here in the British pound if price can break out above this horizontal trendline resistance. Okay, moving on to the Canadian dollar. I pulled this chart up because we got a really textbook channel pattern here. So we have a really strong trend line to the upside. Keep in mind, guys, that the strength of the trend line is related to how many times it's been tested. So here we can see that it's been tested multiple times. We've got a nice channel down here. The lower trend line also been touched multiple times. It's like the 200-period moving average came into play here a little bit. So with this US dollar to the Canadian dollar chart, dollar CAD you might call it, we're looking for breakouts to the upside here, potential breakdowns here. Another nice technical chart that I wanted to pull up was we got a good channel here in the euro against the New Zealand dollar. This is what is described as a currency cross. A currency cross is a pair that does not contain the US dollar. And so in the case of this euro against New Zealand dollar, we're looking for potential breakouts above this trend line here. Let's take a look at gold, guys. Again, we've got a nice channel upwards. We can see that the moving averages are coming together. We've got the 200-period moving average here and the 50 here. If we see a crossover occur, like we did in the pound chart earlier on, we can see a potential buy signal coming there. Again, you can look at these trend lines as levels of potential resistance and support down here and look for breakouts above or below. Next, guys, we're going to look at some shorter term charts which are going to be more useful for the day traders out there. We've got a wedge pattern here in the New Zealand dollar against the Canadian dollar. So this is another instance of a cross, and it looks like we had a little breakout here. I'll just redo the trend line if I can. So price broke out here, and we can look for potential continuation to the upside here. Another short-term chart that I wanted to pull up, this is the euro against the Canadian dollar on the hourly chart. So this is a shorter term time frame. Keep in mind that the signals that you get from shorter term time frames are less reliable than what you get on long-term time frames. So for example, if you get a signal on a 15-minute chart, it's going to carry a lot less weight than the same signal on the daily chart, because in the lower time frames there's a lot of noise in the market. One big order might move the market, this kind of thing. But if you're a day trader, you're going to want to be looking at these shorter term charts also, because as I said, if you're just looking at the daily chart, you might not get a signal for days. And we'll get into that a little bit more when we talk about this hypothetical trading strategy that I had mentioned. So rising channel here in the euro against the Canadian dollar. Again, we're looking for breakouts to the upside, breakdowns to the downside. Price moving down below here, and potential follow through, potential selling, continuing to the downside. A breakout above here, we might see a fluid move and more buying above it. Okay, moving on, guys, we are going to talk about a sample trading strategy. This strategy is just called the 60-period SMA system, and it uses something. It uses a couple of different concepts. First of all, it uses multiple time frames, I think, which is a really important concept to get into. So we're going to look at 3 different time frames here. We're looking at the 4-hour chart, we're going to look at the hour chart, and we're going to look at the 15-minute chart. And it's a very simple system. All we're looking at is the euro, and we have a 60-period SMA here on the 4-hour chart. We have exactly the same thing on the 1-hour chart, and we have exactly the same thing on the 15-minute chart. So what we're looking for in this system is potential, we're looking for price to cross above the 60-period SMA on the 15-minute chart, but there's a couple of different conditions. So here we have price above the 60-period SMA on the 4-hour chart, which for this time frame means we're in sort of bullish territory. Looking at the hourly chart, we're above the 60-period SMA, which puts us in bullish territory for that time frame. For the 15-minute chart, we can see that we're below the 60-period SMA. So the conditions that you have for a buy signal using this strategy are, you want to see that price is above it on the 4-hour, price has got to be above it on the 1-hour, and you're looking for price to come up and cross it on the 15-minute chart, and that's your buy entry signal. Conversely, if to have a sell entry signal, you want to see price below the 60-period SMA on the 4-hour chart, and it has to be below the 60-period SMA on the 1-hour chart, and then you're looking for price to cross below the 60-period SMA on the 15-minute chart, which is going to be your entry signal. So let's take a look back and see what happened in this bar. Okay, so this is when price crossed below the 60-period SMA on the 15-minute chart. So this is where you would have got a potential sell signal. So again, with this strategy, we're using multiple time frames, and that's a really important concept to get used to and look at in your trading, because you're going to want to have confirmation of what the trend is across multiple time frames if you are looking for a really strong signal. So it's a very simple strategy. It just relies on a couple of different rules, but it's one that may generate several trading signals within one day. You can start tweaking the system and adding other things to it and experiment with it. So the idea of this webinar is educational, to give you ideas. So for example, you might want to add another condition to the trading strategy. Let me pull up the RSI here. So for example, if you wanted to add another condition to the system, you might want to see the RSI being pointing upwards before you get into the before you take the signal when the price crosses to the upside here on the 15-minute chart, which is your entry trigger. So that's just another example of another condition that you might add to the trading strategy. But in my experience, it's good to keep things simple, and some of the most successful traders that I've known have just used a handful of indicators and kept their strategies very simple. There's a term in the industry called paralysis by analysis, and that kind of describes when people have too many indicators and they have indicators that are telling them to do one thing and then another indicator that's telling them to do another thing, and they just become confused and they don't end up taking any entry signals. So in my view, especially starting out, it's a good idea to work with a few indicators and get used to those and work with the best and most reliable entry signals. So with that, guys, I think we're going to wrap it up. I want to thank you all very much for joining us today. I look forward to seeing you again tomorrow and wishing you good trading for today's session.